Welcome to the Deep Dive, your express route to the crucial insights from today's corporate earnings calls.
Hello.
Right now, we're zeroing in on Air Lease Corporation's performance. This is for the first quarter of 2025.
Yep, AL's Q1.
Our mission, as always, is to pull out the core knowledge you need, make it quick, make it hopefully entertaining.
Absolutely. And Air Lease reported a strong first quarter. Revenues hit $738 million.
Okay.
And diluted earnings per share were $3.26.
$3.26. That sounds pretty solid.
It is. And what's really interesting here is that these results pushed the company to all-time record highs.
Records. In what exactly?
Well, total revenue, the net book value of their fleet, and also their book value per common share. All records.
Wow. Okay. Record highs across the board. That definitely paints a positive picture. So let's unpack what fueled this success, but also maybe touch on any headwinds they faced.
Right. So the positive momentum came from a few places. Their fleet kept growing. That's one.
Standard growth, yeah.
And they saw some really significant gains from selling off aircraft. Plus, those insurance settlements related to their Russia fleet, that was a big tailwind.
Ah, the insurance money, right.
Exactly. But, it wasn't all smooth sailing. They did have increased interest expenses.
Expected in this environment, I suppose.
True. And also some one-off costs tied to the retirement of Steve Azzi.
Okay, got it. So let's dive a bit deeper then. How's their core business, the actual leasing of aircraft? How's that performing?
Rental revenue looked solid. It was up 5% compared to last year, hitting $645 million.
5% growth, okay.
Yeah. And interestingly, the yields, what they're actually earning on those leases, they were pretty stable year over year.
Stable, not up significantly.
Well, stable compared to last year, but they did see a slight improvement from the previous quarter, Q4.
Okay, sequential bump.
Exactly. What's kind of notable, though, is that their revenue from leases ending in the quarter, what they call end-of-lease revenue, that was actually lower.
Lower. Why is that?
It's because they're seeing higher rates of lease extensions. Airlines are holding onto the planes longer.
Ah, okay. So fewer planes coming back to them.
Right. And the expectation is that these extensions, often signed at higher lease rates now, will mean those aircraft are worth more when they eventually do sell them.
I see. So maybe a bit less cash right now from those specific end-of-lease events, but potentially a bigger gain down the road, a strategic trade-off.
That seems to be the thinking, yes. It's a longer-term value play.
Makes sense. Now, you mentioned aircraft sales were strong. Let's talk about that.
Absolutely key this quarter. They sold 16 aircraft.
16, okay.
And that brought in $521 million in proceeds.
And the profit on those sales?
Generated a gain of $61 million. That works out to a pretty healthy 13% gain on sale margin.
13% is quite good.
It is. And it really just highlights the embedded value they have in their fleet and their knack for timing those sales well.
Okay. Let's talk interest rates. Everyone's focused on that. How did the higher rate environment impact Air Lease?
Well, their interest expense did go up. It increased by $28 million compared to Q1 last year.
Okay. And the main reason?
Primarily because their overall composite cost of funds rose. It's now at 4.26%.
4.26%, right.
And also, slightly higher debt balances compared to last year contributed a bit. But, and this is important.
Yes.
Their debt balance has actually come down since the end of 2024.
Down? How? Oh, the insurance money again.
Exactly. Those insurance recoveries helped pay down some debt. Plus, about 78% of their borrowings are at fixed rates.
Ah, so that shields them quite a bit from the immediate impact of rising rates.
Precisely. It acts as a pretty significant buffer.
You keep mentioning these insurance settlements. Can we put some firmer numbers on their impact this quarter?
Definitely. So in Q1, Air Lease actually received $329 million in cash from insurance settlements related to the Russia situation.
$329 million. That's substantial.
It really is. It contributed about $2.36 per share to their earnings just on its own.
Wow.
And it boosted their book value per share up to $62.32.
Significant impact, then.
Huge. And what's more, they received another chunk, $227 million, the week after the quarter ended. So that'll show up in Q2's results.
So this is a major cash influx happening.
A very major influx, yeah.
Okay. Looking ahead then, how are they thinking about financing, funding operations, future growth?
They seem pretty comfortable, actually. Their view is that they can largely self-fund their existing aircraft order book over the next few years.
Self-fund? Through what?
Primarily through their operating cash flow, the lease payments coming in, and also the proceeds from these ongoing aircraft sales.
So less reliance on new debt.
The idea is that any remaining financing needs will mostly be for refinancing debt that's maturing, rather than taking on lots of new debt for growth.
And they have the facilities for that.
Oh, yeah. They recently upsized their main revolving credit facility. It's now $8.2 billion.
$8.2 billion. That's a lot of liquidity.
It is, and they extended it out to 2029. Plus, they mentioned they've now hit their target debt-to-equity ratio.
Hitting the target. That's a key milestone.
Yep.
Puts them in a strong position financially.
Exactly. Gives them flexibility.
Okay, let's shift gears to the actual planes, the fleet itself. What were the main movements, buys and sells?
Right. So on the buy side, they took delivery of 14 new aircraft from their order book.
14 new planes, investment value.
About $800 million added in new flight equipment.
Okay. And on the sales side?
That was the 16 aircraft we already talked about, bringing in the $521 million.
Got it. How does that affect the overall fleet metrics? Age, lease terms?
The weighted average age of the fleet ticked up just a tiny bit to 4.7 years, still very young.
Still young, yeah.
And the average remaining lease term held steady at 7.2 years. Also quite long.
And utilization. Are the planes flying?
Impressively, yes. Fleet utilization remained at a perfect 100%.
Still 100%.
Yep. Every plane leased out and operating.
Okay. What about the outlook for the rest of 2025? More deliveries coming.
Their forecast for new deliveries for the full year hasn't changed. Still looking at $3 to $3.5 billion worth of new aircraft.
And for Q2 specifically?
They expect about $800 million of that to land in the second quarter.
But I think I saw something about delays for manufacturers.
Ah, yes. Good point. Airbus has notified them of some additional delays.
Which aircraft?
It's mainly impacting some A320 and A321neo deliveries.
When were those supposed to arrive?
These are mostly planes scheduled for 2027 and 2028. The delays are pushing them back by about a year, generally.
Okay, so further out, but still, the supply chain issues persist.
Definitely still a factor. And their plan to keep selling aircraft, that continues too.
Oh, yes. The sales pipeline remains strong. They currently have $741 million worth of aircraft under contract for sale. All contracted already.
Yep, and they emphasize these are at, quote, healthy gain on sale margins.
Good sign. And the full year target for sales?
Still projecting around $1.5 billion in total sales for 2025. They expect about $300 million of that to close in Q2.
Okay, so active portfolio management is clearly ongoing.
Very much so.
The earnings call also touched on the wider market, didn't it? Tariffs, regional differences. What was the takeaway there?
Yeah, they gave quite a bit of color on that, and it really highlighted some divergence between regions.
Okay, like where?
Well, North America. Airlines there have apparently seen some softening in passenger traffic.
Softening.
Yeah, and some have actually reduced their forward guidance, especially after those U.S. tariffs were announced. United was mentioned as giving different guidance for North America versus elsewhere.
Interesting. So softness in North America. What about Asia?
Different story, according to Air Lease. Airlines in Asia are reporting continued strong passenger traffic, strong forward bookings overall.
Despite tariffs.
Despite tariffs. Now, they did acknowledge some pre-existing softness in like trans-Pacific economy fares and maybe some wobbles in cargo demand right after the tariff news. But crucially, the demand for aircraft in Asia remains consistently strong.
And they don't expect retaliatory tariffs on planes.
They consider reciprocal tariffs specifically on aircraft unlikely in that region.
Okay. Asia's strong. What about Europe and the Middle East?
Also looking robust. European carriers, they mentioned big ones in France, the Netherlands, reported strong bookings, maybe a bit of discounting in economy, but summer trends look positive.
And the budget carriers.
Groups like Lufthansa, Ryanair, Wizz Air also reported positive results. And traffic. So again, aircraft demand in Europe is strong. Middle East market also described as strong.
So mostly positive outside North America.
Pretty much. Lease rates globally are still trending higher. Extension activity is strong. Forward placements for planes delivering later are also robust.
What about macro factors? Fuel, currency.
Global traffic growth is still running ahead of global GDP growth, which is a good sign for the industry. Fuel prices have been trending down lately, which helps airlines.
Right.
And the weaker U.S. dollar actually benefits many of their foreign lessees, makes the payments cheaper in local currency terms.
And that's important because most of their business is outside North America.
Right. Exactly. 87% of their business is international.
Okay. We touched on aircraft supply delays. What's the broader picture there from Air Lease's view?
The core message is supply from both Airbus and Boeing is still tight. It's below the rates needed to meet all the ordered commitments.
And how long do they see this lasting?
They expect these supply constraints to continue for the next 3 to 4 years, maybe even longer.
Wow, that's quite a while. And tariffs could make that worse.
That's the concern, yeah. Tariffs could potentially weaken the supply chain further.
But how does this affect Air Lease directly? Do they pay the tariffs?
No. They structure their contracts so the responsibility for any import tariffs falls on the airline customer.
Ah, okay. Pass through.
Correct. And currently, they don't actually have any aircraft delivering to countries where these specific tariffs on commercial aircraft would apply. Their China exposure is also minimal right now.
And the point about state-owned airlines.
Right. Many of their international customers are government-owned or backed airlines. Think Morocco, Oman, Argentina, Croatia. Those are examples for 2025 deliveries. That makes reciprocal tariffs on U.S.-made aircraft less likely politically.
I see. What about the cost of the planes themselves? Are they protected?
Yes, they have long-term forward purchase agreements with the manufacturers. These have escalation caps, sort of limiting price increases on the airframes, engines, and equipment.
And maintenance.
Maintenance costs are the airline's responsibility, not Air Lease's.
Okay. So while the broader economic impact of tariffs is, uncertain,
Speculative, really.
the current demand picture outside North America looks strong, and Air Lease feels relatively insulated contractually.
That seems to be their position. They believe the tariff issues will eventually get resolved. They even floated the idea that if tariffs remain long-term, U.S. manufacturers might eventually set up production lines overseas.
Which would be ironic, given the administration's goals. Okay, finally, capital allocation. They hit their debt target. They've got this insurance cash. What are they thinking of doing with it?
Right. Reaching that target leverage ratio, especially with the insurance money boosting things, opens up options. They're actively looking at various strategies.
Which has?
Well, organic growth is one. Maybe acquiring used aircraft fleets if the opportunity arises, or looking at planes that were maybe intended for China but haven't been delivered.
Interesting. What else?
Inorganic growth is on the table too, though they didn't detail specifics. And of course, returning capital to shareholders.
Share buybacks.
Share repurchases are definitely being considered, especially with more insurance money potentially still to come.
So all options open. Any timeline.
All options seem to be under consideration. No fixed timeline for a decision yet. Sounds like they want to see how the rest of the insurance situation plays out first.
But they're being careful about ordering new planes.
Yes. They emphasized a disciplined approach there, particularly since Boeing and Airbus order books are so full for years out.
Makes sense. Any other quick points from the call?
They reaffirmed their leverage target of 2.5 times debt to equity. Mentioned the credit facility upsize was really driven by strong bank demand, showing market confidence. Developing a new managed aircraft fund structure is still a long-term goal. And importantly, their overall profit expectations for the year haven't changed.
Okay, solid update overall.
Seems that way.
All right, let's move to our final segment. This is not financial advice. Given everything we've just discussed, what's a potential, maybe slightly unconventional but still plausible, trade idea that springs to mind?
Okay, yeah. Thinking about this. You've got this sustained strong demand for planes outside North America. You've got major delivery delays from the manufacturers creating scarcity, and you have Air Lease hitting its debt target, flush with cash from insurance.
Right, setting the scene.
So here's a speculative long-term thought. Consider a long position in Air Lease itself, ticker AL.
Okay, long AL. Makes sense given their position.
But pair it. Simultaneously take a short position in a broad-based North American airline ETF, something like XAL in Canada, or a U.S. equivalent.
Long AL, short North American Airlines.
Yeah.
A pair trade. What's the rationale?
The idea is to play the divergence. You're capitalizing on the potentially different trajectories. North American airlines might face these headwinds. We discussed tariffs, maybe softer traffic.
While the rest of the world, where AL is focused, looks stronger.
Exactly. That robust demand in Asia, Europe, the Middle East should directly benefit lessors like Air Lease, especially in a supply-constrained market. The insurance money gives AL extra firepower for growth or shareholder returns too.
And the short airline ETF part.
That acts as a partial hedge. If there's a broader downturn that does hit the whole aviation sector, the short position potentially offsets some losses. But it specifically targets the region showing signs of relative weakness right now.
So it's not just sector rotation, it's more targeted than that.
Right. It's really a bet on this specific global macro theme, the uneven impact of tariffs, the regional demand differences, and how that affects different players in the aviation world. With a well-capitalized lessor like AL positioned, you could argue, to disproportionately benefit from the stronger parts of the market. Outrageous but plausible, as you say.
Interesting angle. A play on regional divergence within the sector, underpinned by AL-specific strengths right now.
That's the idea.
Right.
But again, highly speculative, long-term view.
Understood. So that's the core analysis distilled from Air Lease's first quarter 2025 earnings call.
Hope that gives you some useful context.
We certainly trust this focused breakdown helps. And remember, folks, this is absolutely not financial advice. Always do your own thorough research before making any investment decisions.
Definitely.
Now we're curious, what are your thoughts on these differing trends? This regional split in air travel demand? Join the conversation. Let us know what stood out to you from this deep dive.